Hi crypto fans, welcome back here with more news on the Bitcoin, and today we're looking into the price predictions as well as the price explanation on why the 10 trillion market is about to enter the Bitcoin, how BlackRock is preparing something massive for the Bitcoin, and we're going to discuss everything about it in today's video. Don't forget to subscribe, like and share, and let's start. So, breaking news, BlackRock 10 trillion asset manager has reportedly lined up 2 billion for its spot Bitcoin ETF within days of launch, and we are about to see it on the 10th, with 3 days only left for the ETFs to be approved. We're going to see it pretty soon. Understand this, there is probably not a single day in Bitcoin's history where there has been a net inflow of more than 1.5 billion long on Bitcoin, and the ETFs are about to get a mandate to buy roughly 3.5 billion in the space of 5 days, with a bulk of it coming in one day, in only one day. No one is ready. 100% Bitcoin is manipulated to the hilt. Spot Bitcoin ETFs coming next week. More than 10 institutions will probably get them. The halving in a few months. Bitcoin is all over financial cable channels. Mass awareness is here, and we're going down again below 44,000 only because you need to sell the news. When the news appear, you should sell, not buy. 21 million is not optional. Bitcoin won't be adopted like the iPhone because it's cool. It will be adopted like gunpowder. If you don't own it, you'll be its victim. And basically, you need to understand that. Bitcoin has been consolidating above $40,000 for 35 days now. This includes two of the biggest liquidations events in the past 12 months only. There are the same 80 IQ technical analysis for the streets, so you can basically see this that we had before, and now we are building the same chart again, and this basically what we're looking in. A little drop, then the massive explosion comes in, and you need to understand and expect it pretty soon. Bitcoin bullish institutional bias. Institutional bias remains bullish with Bitcoin retesting the blue line. When in doubt, zoom out. Institutional bias is made of 9 EMA combined with 18 EMA. Next up, we go with, for the first time in over 8 months, all cohorts on aggregate are outpacing the monthly issuance of Bitcoin, 53,800 more than 27,000, starting to see accumulation as we gear up to the ETF approval. Remember, those who will buy the Bitcoin ETFs don't buy Bitcoin directly, and vice versa. They are the traditional investors who buy index funds, who buy safe stuff. These pods still have most of the money in the world. The ETFs will make Bitcoin accessible to them. These spot Bitcoin ETFs will probably get accepted within the next 48 hours, and on a screenshot we could see all of them. Yeah, for sure, we'll all know which are those, and we already saw the screenshot before, so we are preparing for the moment when it actually is going to happen. If Bitcoin captures 1% of the assets, Bitcoin equals 500k. Long term, 10-20% seems more realistic. You do the math. Market capitals visualized. Bitcoin less than a trillion, gold 12.2 trillion, equities 108 trillion, debt 303 trillion, real estate $326 trillion market. So, for anyone that needs to be reminded, a spot Bitcoin ETF is not the same as real Bitcoin. Anyone who says this is being completely disingenuous, this is incredibly obvious to those who have paid attention to the crypto contagion, Celsius, FTX, BlockFi over the last few years. Even if redemptions are possible for 100% of your Bitcoin with no downtime 24/7, it's at the best no different than owning Bitcoin in a highly regulated exchange like Coinbase. So you're making a trade-off by allowing someone else to custody the asset. You're hoping that it's not rehypothecated, no private key errors are made, custodians are honest, the government won't rug pull you, the exchange price is not manipulated. So not only this, but you're going to be paying a management fee to have them custody your asset. So in other words, you're paying for a risk, and there's absolutely no way I would encourage a current self-custody user to transition to an ETF. However, there are certain demographics and reasons some companies and investors would use a highly regulated entity like BlackRock or Fidelity to manage the risk. My fear is this: After Coinbase and other large custodians absorb larger amounts of cold storage Bitcoin, the government could potentially intervene as a matter of national security and assume control of the Bitcoin, possibly repricing it and replacing your fiat value with CBDCs, similar to the repricing of gold by Roosevelt in 1934. Maybe this is 20 years down the line and maybe the chance is very low, but the risk is not zero. Remember, not your keys, not your coins. This is not a financial advice. Also, when Bitcoin flash crashed on Tuesday to 40k, I had issued 2 different exchanges to buy. I expect the same thing, which is why I've done my Christmas shopping early this year. I also expect this will be the cycle that exchanges will start to go down as they don't have anywhere near the amount of Bitcoin reported. So if you have any coins and exchanges, it's time to take them off. So don't forget to subscribe, like, and share, and see you in the next one. Peace.